Managing your family's cash is key to meeting your financial goals. How much should you keep in your bank account? How much should you put in investments? Where's your emergency fund? There's at least 5 reasons to hold cash, but without a good reason to hold cash, you may be holding too much. Here are the guidelines we recommend to our clients, and they may help you evaluate your situation. The first thing is that you need cash for daily expenses. It's difficult to run a family budget if your bank account has the bare minimum. We recommend that you keep in your checking account between 2 and 3 times your monthly expenses. So if you're paid once a month, then you might have 3 months worth of spending at the beginning of the month. And then as you spend it down, you may spend it down to 2 months worth of spending. And then you get paid again and it bumps it back up to 3. Having between 2 and 3 months worth of spending in your checking account provides you a nice cushion. And if there's unexpected repairs or big purchases, you don't need to go back and ask for some more money. Next, you need an emergency fund in case you're unemployed. The first 3 months of your emergency fund are in your checking account, and an additional 3 months should be invested in vehicles that could be easily sold within 90 days. Your emergency investments should not be in a retirement account, but they also do not need to be in a money market account. They just need to be easily sold. So mutual funds, stocks, exchange-traded funds are good investments for where to put this emergency fund. If you have an emergency fund for the 4th through 9th month worth of spending in investments, then over time those investments will grow and then you'll have 2 emergency funds. And then you'll be able to increase your wealth that way. You should also put money into cash if you're saving for a specific financial goal. So assets that are set aside for specific goals, anything within the next 2 to 5 year time horizon, should be put in some kind of a stable investment. Again, money market may not be the best investment. You may be able to get a better rate of return either by buying a bond that's going to mature in that year, or by putting it into a bond-like investment, or putting it into some kind of a CD. Finally, you need to have the right balance of having some stability in your portfolio. Having some cash on the sidelines or something in a cash-like investment can actually boost your returns. When the markets go down and correct, you can take some of that cash on the sideline or dry powder, put it back into the markets, and actually have your investments recover faster. And then when the investments are doing well, you need to take some money off of the table and put it back onto the fixed income side. I think it was the Yale Foundation who said just that simple act of rebalancing can boost their returns by 1.6%. You also need to have money for liquid transactions. So you need to have some liquidity just for buying and selling investments. But if you're holding cash simply because it's building up in your checking account, then you need to implement an automatic saving and investing process. Set up automatic savings investments for all of your financial goals. And don't forget to include a monthly transfer for taxable savings as well.